Moon Platoon. It could be that you're seeing double, and I cannot wait to tell you about the potential double. The double gamma squeeze, the fact that the $40 strike is both a hub for puts and calls, and the pivot of which people started talking about crypto. And the crypto market has already started to be pitted against the meme stocks, and CNBC is the first to start calling it. It's over. It's over. Everybody. It's not even close to being over. And there is a crucial hedge fund trick that we might be at risk of falling for if we don't learn about this video. Like it until we get to 2,900 likes, and comment out which one you are as we get ready for everything you need to know for tomorrow. And the market's open doesn't mean that you guys are going to have to be blind. We're going to be going in bell to bell, and I hope you guys join us then. Smash that subscribe and let's get going. First things first, right? We have that cup and handle that we've been tracking on GME. We have this macro pennant that we've been tracking on AMC multiple times, and the fact that it has dipped underneath this teal pennant in the dotted lines here is going to give you deja vu, the double deja vu for how it dipped below that golden pennant for 48 hours. Of course, this time around, it has dipped for half a whole week, 4 days underneath it. So that's why a couple of people are already starting to throw in the towel. However, some other articles are saying that the revolution will last. This is going to be all entirely dependent on the options chain. Let's start on July 6th, and let's specifically look at $40 strike. If you take a look, $40 had $1 million of calls at it. This is when the very tip of the bottom of this pennant, right around the 6th here, fell underneath the macro pennant. So here was a day of low volume, and we had $1 million of calls at $40 strike, right? Basically even between puts and calls. If you go forward one day at $40, you're going to have 4 times the number of puts, but around the same number of calls. So at this point in time, the vulnerability of AMC's price action dipping below $40 gave a lot of bears the audacity to try to buy in heavily into puts. The next day goes from not only 4x to 11x the 2 days prior. So $11 million worth of puts and only $2 million worth of calls. This is when AMC dipped below $40 and then rose way above 40, way above 45, putting $20 million worth of puts out of the money. So bears got a heavy jolt to the system. Why? It's mostly because the fact that once AMC fell across a crucial support, a 44.66 retracement right here, this orange line that counted back the amount of price action that we got from the January and the March gamma squeeze, people started to falter their confidence. However, when we got to the last resistance support level, that 37.89, before we got down to 160% retracement, the rest is history. Putting $20 million out of the money worth of puts is not a small feat, which is why the next day, this is the day that I couldn't be here with you guys, we had $5 million worth of calls at $40 strike, and all those puts are gone. So deep in the money calls are back in it, and if you guys haven't seen that video, I'll link it down in the description below of SEC telling you exactly what the deep in the money calls are used for. So it seems like hedge funds are still putting these deep in the money calls to cycle out FTDs. So AMC off the threshold list, it was on it for a couple of days, but past that, we did not see the same effects as GME. So once we have a better understanding of where this is going to start going, for example, a crucial bounce off of $40, which is going to be likely if there are going to be puts that are calling AMC dipping below $40. As you understand, we track iBorrowDesk each and every day to see how many shares are being borrowed in the morning, and that is ammunition for the hedge funds for the day after that. And so if you guys track iBorrowDesk, we noticed that during the AMC's most crucial dip right here, we had over 2.6 million shares borrowed on that day. So AMC is looking like it's caught between a rock and a hard place. Right now, where the consumers want AMC to go is where Mr. Adam Aaron has told everybody. In fact, I had a whole video about that. I'll link that down in the description below on Friday about being the year of the ape. AMC is officially controlled not only in the float by the retail investors, but also by executive decision. Adam Aron took off vote number 1 for July's end of July annual meeting. And so right now, there's no more dilution. AMC is humping it up. Right now, a lot of people are starting to say, is that an error in response to its shareholders? Right now, people are trying to spread that fear that the fundamental play for AMC is the most important play when we know for a fact that it isn't. So let's take a look at what CNBC actually has to say for why meme stocks are falling and retail is moving to crypto. So is there any validity to it? Let's do some FUD busting before tomorrow's big day.
Crypto headed in opposite directions over the last month. Our Kate Verney has more on where retail investors, traders are putting their money to work. Kate. Hey, D, crypto traders are picking up some slack for fading meme stock activity. The peak of day trading for stocks was back in January during, who can forget, the GameStop frenzy.
That's actually incorrect already. As you know, the peak of the craze was for AMC jumping 500% in the course of so many days to a week and a half. So once AMC was able to push all the way through, it had loads more volume than in the GME craze when it went up to $500. So AMC right now is playing a major fundamental meme stock revolution. As of right now, GME was the most important predecessor, passing the baton. But if people are trying to push all of the craze on 5 months in the past, it's much easier to drive their own narrative. Remember, when I said on Charles Payne, it's fear, uncertainty, and FUD, fear, uncertainty, and doubt for FUD until it's propaganda.
Trading volume measured on Charles Schwab dropped roughly 30% from the first to the second quarter of this year. Goldman Sachs lays that out in a note to clients this week and downgraded Schwab as a result. And according to another firm, Vanda Research, weekly purchases of meme stocks, notably GameStop and AMC, are down from a peak of nearly $1 billion in June to roughly $300 million this week. And in the past week alone, purchases of those stocks dropped by roughly 28%.
Okay, so FOMO brings in people who want to invest in AMC and GME. A bunch of people turn out to be diamond handers and stay in the game, and some people are paper handers to begin with. 28% is as if the baseline of that metric wasn't an incredible thing. For example, right, they said $1 billion. 28% subtracted from that $1 billion mark. Do you think that other stocks right now in the same space as AMC and GME can say the same? Sustaining that many people inside that retail trading bubble versus people who would have easily dumped this stock if it was properly a distraction or a pump and dump. As you can understand, these statistics and this big red arrow is meant to drive their narrative only.
Over there say that it shows investors are, quote, falling out of love with that segment of the market. Those stock prices are catching up with weaker demand as well. Shares of GameStop and AMC down about 30% and 6% respectively for the month. Still, though, they're up big this year. And in contrast, guys, crypto trading activity hit a new high in the second quarter. That was while Bitcoin touched about 60,000 back in May, then dropped.
That's a hilarious comparison. Let's say that we compare AMC's high of 72 to its current $46, right? It's trading roughly exactly the same ratio as Bitcoin going up to 60 and dropping down to 35. In fact, AMC wasn't like Bitcoin in the beginning of the year. Bitcoin was trading healthily around basically where it is right now, and AMC is trading at single digits. So it is a very false equivalence to say that people are now piling back onto Bitcoin when it was already trading in the same magnitude as it is trading right now.
To about 30,000 where it's trading right now, or the 30,000 range. Goldman does expect that to, quote, significantly boost Coinbase results. Some others that could benefit as well, Square and PayPal, both of those companies now offering crypto trading. Those stocks are up double digits this month, and this shift in trading behavior could also shake up some of the revenue dynamics over at Robinhood. That company slated to go public at the end of the month. Crypto trading made up roughly 17% of its revenue for the first quarter. Equities and options combined made up about 60%.
Isn't that funny that they will turn it right back around to Robinhood of all places, giving them free publicity for their IPO coming up? So make your own decisions, but understand that when we started trading 3% lower than this top of the pennant, which we touched during the pre-market, remember that day I couldn't be here, we had one crucial rejection down to the $40 support where we were caught in Thursday's trading. So if you guys are excited for another day of amazing trading, then make sure to tune in for tomorrow, where me and Professor Meatball, yours truly, and the professor are going to be tracking the stock market with you. I want to thank every single person in the Moon Platoon, Grillionaire, and the Space Legend that makes this show possible, because without you guys smashing the like button and going down to the Weeble link in the description, you would not be able to have this show be the size and the magnitude that it really is. So from the bottom of my heart, thank you, and I cannot wait to be in this chair again tomorrow morning. For now, but not for forever, peace, and see you in the money.